Right. Stop scrolling for just a moment because if you're a pensioner in the UK or you have a parent or grandparent who is, what I'm about to share with you could genuinely change how much money lands in their pocket from the September 1st, 2026. The WPA, that's the Department for Work and Pensions, has just confirmed 6 significant changes to the pension system. And I'm not talking about minor tweaks buried on page 47 of a government document. I'm talking about changes that affect your state pension payments, your pension credit, your cost of living support. And in some cases, and this is the one that shocked me most when I read it, changes that could affect whether certain pensioners have been underpaid for years and are now owed money back. That one's coming up shortly, and I promise you'll want to stay for it. Now, some of these changes are genuinely good news. A couple of them need a bit of careful attention, and one of them, well, I'll just say this: if you or someone you love isn't claiming something they're fully entitled to, September could be your turning point. I've spent the last couple of days going through the official announcements, and I want to break all 6 changes down for you in plain English. No jargon, no confusion, just the stuff that actually matters. So let's get into it. Let's start with the one that affects the most people, the triple lock. Now, if you're not familiar with it, here's how it works in about 15 seconds. The government promised that the state pension would rise every year by whichever is highest out of 3 things: inflation, average earnings growth, or 2.5%. That's the triple. In triple lock, it's supposed to make sure your pension doesn't fall behind the cost of living. And for September 2026, the WPA has confirmed the uplift figure, and it's based on earnings growth, which came out ahead of the other 2 measures this year. So what does that mean in actual pounds? If you're on the full new state pension, that's the one for people who reach state pension age after April 2016, you're currently receiving around £221.2 per week. After this uplift, that figure rises to approximately £230.25 per week. That works out to roughly £11,973 per year. Now, I know what some of you are thinking. That doesn't sound like a huge jump, and honestly, you're right that it's not enormous. But here's the thing: it compounds every year that goes up. The new higher figure becomes your baseline. Over a 5-year retirement, that difference is thousands of pounds. And if you're on the older, basic state pension, the one for people who retired before 2016, your increase is slightly different, and I'll be honest, it's a bit more complicated, which is exactly why change number 3 matters so much. I'll get to that in a moment. But first, one thing I want you to take away from this: if you're not yet claiming your state pension and you've passed state pension age, every week you delay without deferring properly is a week of income you're potentially walking away from. Don't do that. Here's the one that could change someone's life, and I mean that without any exaggeration. Pension credit is probably the most underclaimed benefit in the entire UK system. It's designed for pensioners on low incomes to top up what they receive to a minimum guaranteed level, and as of September 2026, that minimum level is going up. The guarantee credit threshold, the floor that the government tops your income up to, is rising to approximately £227.1 per week for a single pensioner, around £346.6 per week for a couple. Now, here's what makes this so important. Pension credit is what's called a gateway benefit. Claiming it unlocks other things: free TV licenses for over 75s, help with NHS costs, cold weather payments, and crucially, the warm home discount, which is worth £150 off your energy bill. It can also affect your eligibility for housing benefit. So if you're single and your income from all sources, state pension, private pension, savings income, comes to less than around £227 a week, you might qualify. And here's the kicker: even if you have some savings, you might still qualify. The rules around savings and pension credit are much more forgiving than people think. The government's own estimates suggest around 880,000 pensioners who are entitled to pension credit are not claiming it. That is almost 1 million people leaving free money on the table every single week. If there's one thing you do after watching this video, please check the pension credit calculator on gov.uk. It takes about 10 minutes, or call the pension credit claim line on 0800991234. It's free. It could unlock hundreds of pounds a year. I'll come back to something related to this a little later, something about a specific group of pensioners who've been told they owe money back to the WPA, but are actually being given wrong information. Don't go anywhere. Right, this is the one that, when I first read about it, made me sit back and go, really? This is actually happening? The WPA has been carrying out what they call a pension underpayment review. It started a couple of years ago, and it's ongoing into September 2026. And what they found is that a significant number of pensioners, mostly women, but not exclusively, were being paid less than they were legally entitled to. How did it happen? A few reasons: mistakes in how married women's pensions were calculated, errors around what's called Category BL entitlements, which basically means that when a husband reached state pension age or passed away, his wife's pension should have been updated. In many cases, it wasn't. The WPRA has been contacting those affected and issuing backdated payments. Some people have received letters, some have received checks. The average underpayment being corrected is in the thousands of pounds and in some cases, significantly more. But here's the frustrating bit, and I want to be very clear about this because I've seen people get genuinely confused and worried about it. Some pensioners are receiving letters from the WPRA and assuming they've done something wrong like they're being investigated. They're not. If you get a letter from the WPRA asking you to confirm details about your marital history or your late spouse's national insurance record, that is almost certainly part of this review. It means they're checking whether you've been underpaid, not overpaid. If you're a woman over state pension age, particularly if you reached pension age before 2016, you were married or widowed, and you feel like your state pension seems low, please do not ignore any letters from the WPRA right now. And if you haven't received one but you're in that situation, you can contact the pension service directly to ask them to check your record. This could mean a lump sum you weren't expecting. I've heard from people who received over £5,000 out of the blue. That's real money. Don't let it sit unclaimed. Now, I want to address something that a lot of you have been asking about, particularly because it's causing a lot of confusion online right now: the cost of living payments. You'll remember that in previous years, the government issued these one-off payments, £300, £150, £299 to pensioners on pension credit, and certain other benefits. A lot of people are wondering, are those coming back in autumn 2026? Here's where I have to be straight with you. As of the September 2026 announcements, the WPRA has confirmed that the previous style blanket cost of living payment scheme is not being renewed in the same format. The government has said the economic situation has shifted enough that the emergency style payments are being replaced by what they're calling targeted support. What does targeted support mean? Basically, instead of giving everyone on pension credit a flat £300, they're directing additional funds through the existing benefit top-up system and through local councils via the Household Support Fund. The Household Support Fund has been extended into late 2026, and local councils have discretion over how to distribute it. So what you might get and how much genuinely depends on where you live. Some councils are very proactive about this. They're reaching out to pensioners directly. Others, unfortunately, are less organized. My honest advice here: contact your local council and specifically ask them what support is available through the Household Support Fund for pensioners in your area. You might be surprised. I've seen councils offering everything from supermarket vouchers to energy bill credits to one-off cash payments. It's not guaranteed, but it's absolutely worth asking. And don't forget, the winter fuel payment situation is still evolving. Make sure you're on the electoral roll and have your details up to date with the WPRA, because eligibility flags are sometimes checked against those records. This one is a bit more technical, but I'll keep it simple, and it directly affects a specific group who have felt genuinely hard done by for years. When the state pension was reformed in 2016, the government introduced the new state pension at a higher rate. But there was a transitional period. People who had built up entitlement under the old system got what's called a transitional rate. For some, that transitional rate has been lower than what they would have expected based on their national insurance contributions. From September 2026, the WPRA is implementing a recalculation process for a subset of these transitional rate pensioners, specifically those whose records show they should be receiving a higher rate due to additional state pension entitlements, what used to be called SERPs, or the State Earnings Related Pension Scheme, are being reviewed. In plain English, if you retired between 2016 and roughly 2021 and you'd spent years paying into SERPs or the state second pension before that, you may be due a higher weekly payment than you're currently getting. The WPRA has said they will be writing to those affected, but if you feel like your pension doesn't reflect your full working history, particularly if you have more than 35 qualifying years of national insurance contributions and still feel your payment seems low, it's worth calling the pension service and asking them to explain exactly how your payment was calculated. It's your money. You paid into the system for decades. You have every right to understand the maths. Okay, the sixth change is a bit different from the others, and depending on how you feel about computers, you'll either love this or roll your eyes at it. The WPRA is rolling out an expanded online portal for pensioners from September 2026. They're calling it an upgrade to the existing personal pension account system, and it's designed to let you do more things online: check your payment schedule, update your bank details, view your state pension forecast, and eventually claim pension credit digitally without needing to call. Now, I know that for some of you, online government websites are not exactly your idea of a good time, and honestly, I get it. These systems can be confusing, and there are real concerns about digital exclusion, particularly for older pensioners who don't have easy internet access or feel comfortable navigating these platforms. Here's what I'd say. If you're comfortable online, it's genuinely worth setting up or updating your access to your personal pension account on gov.uk. It's actually quite useful once you're in. You can see your payment dates clearly, which helps with budgeting. And if you ever need to update your address or bank details, doing it online is faster than waiting on hold. But, and this is important, the WPA has confirmed that phone and postal options are not being removed. If you prefer to deal with everything over the phone or by letter, that remains available. Don't let anyone pressure you into going online if it doesn't suit you. The number to keep handy, the pension service, 0800 7310469, free to call from landlines and most mobile phones. Right, let's bring it all together because I know that's a lot of information and I want to make sure none of it gets lost. Here are the 6 WPA pension changes confirmed from September 1st, 2026. 1. The state pension triple lock uplift is confirmed. Full new state pension rises to around £230.25 per week. If you haven't checked your payment recently, do it now. 2. Pension credit thresholds are rising. If your income is under roughly £227 a week as a single pensioner or you haven't checked in a while, please use the gov.uk calculator or call 08009912234. This is the most underclaimed benefit in the country. 3. The pension underpayment review is ongoing. Women pensioners in particular should check any letters from the WPA carefully. You may be owed a backdated payment, not the other way around. For blanket cost of living payments are not returning in the same form, but the Household Support Fund is live. Contact your local council and ask what's available. Don't assume there's nothing there. 5. Transitional rate pensioners from 2016 to 2021 may be due a recalculation. If you have a long national insurance record and your pension feels lower than expected, ask the pension service to explain your calculation. 6. New online tools are rolling out, but phone access is staying. The pension service number is 080073100469. Now here's my honest thought, and I say this as someone who genuinely cares about getting this right for people. The pension system in the UK is complicated. It was built up over decades, it's been reformed multiple times, and there are parts of it that are genuinely hard to navigate without help. That is not your fault. And the fact that hundreds of thousands of people are missing out on money they're legally entitled to, that's not laziness. It's a system that hasn't always made it easy. But the changes coming in September 2026, particularly the pension credit threshold rise and the underpayment review, are real opportunities, real moments where the system might actually be working in your favor if you take a few steps to check. So please, share this video with someone who needs to hear it. A parent, a neighbor, a friend, tag them in the comments, send it in a group chat, because sometimes the difference between getting what you're owed and missing out entirely is just someone saying, "Hey, did you know about this?" I'll be covering more updates as they come through, so if you haven't subscribed yet, hit that button so you don't miss anything, and drop a comment below telling me which of these 6 changes surprised you the most. I read every single one. Take care of yourselves, and I'll see you in the next one.